Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, as you can see on the screen, gold closes higher on a weakening dollar even as yields rise. Gold prices rose in light holiday trade early on Friday as the dollar weakened while rising treasury yields checked the gain. Dollar slips on bets US rates have peaked. And if we look at the chart of US dollar index, then as we all know that the DXY is in downtrend for the last couple of days and weeks, and the selling pressure is still very much there in the market. No fundamentals have come for a rescue yet. As a result, the selling pressure will remain. We can clearly see that the structure of DXY is not very positive, so it will bring some further upside or strength on the chart of gold. We can see that DXY closed at 103.41. And if we observe the market structure is like this. So we can expect that by next week, DXY will be forming lower low of, and as a result, there will be further upside on the chart of gold. The next support on the chart of DXY is around 103 level. So on Monday, if DXY starts going also, due to less volume, we may get a minor bounce, but the bounce doesn't guarantee a trend reversal. And in the coming days, we can expect that the market will be going down. So yes, you should be looking for buy side on the chart of gold because of the ongoing market sentiment. And this is the chart of gold in front of us. This is the hourly chart of gold, and undoubtedly the market is bullish. We discuss about the uncertainty regarding the resistance of 2010 level because of the contracts, because of the huge number of contracts standing at 2000. And right now we have come to the month end, and if you don't know that contracts do expire during the month end, the contracts expire. So as a result, there is a good possibility that by next week we will get to see another high, or market will be breaking this level on gold. So my dear friend, if you are a swing trader, if you are a positional trader, and if you have a buy on gold, then be on the trade, because yes, further upside is very much possible. And on the other hand, if you are holding a sell position on the chart of gold, then my dear friend, you are in a very critical position. Try to exit from the position if you see market coming down. I don't think so we have any trend reversal possibility. During the weekend, if any news comes out, that's a different chapter. But as of now, we don't have any news yet. So the market sentiment will take the gold towards the upside. So if you have a sell, then try to exit as soon as possible. Okay. So now let's look at the weekly chart of gold here. On a weekly chart of gold, we can clearly see that this week markets form a big green candle. And if we observe the weekly picture, then we can see an ascending triangle pattern. Ascending triangle is a bullish pattern. So this time I believe that if gold goes up, then it will break 2080 the previous high, and we will get to see a new high on the chart of gold. But yes, it will take couple of days, couple of weeks, couple of months. But yes, it is very much possible. So if you have a swap free account, then yes, you can hold your buy position on the chart of gold, because maybe we will get to see a new high. Okay. And if we look at the daily chart, if you look at the daily chart of gold, then we can see that on the daily chart of gold, we have a sideways kind of a market, and we have a possible double top formation here. My dear friend, double top is just a chart pattern. Market sentiment is above all, but still there is a possibility of a double top formation. That's why I was telling you guys that market needs to cross 2010 to continue the upside. Okay. And my dear friends, this is FastBull. FastBull.com is a very good friend of traders like us for fundamental analysis and timely news updates and financial updates. My dear friends, FastBull.com is extremely useful. You guys have loved the website and the mobile application. You can see that not only FastBull gives us AI generated signals, risk management is important, but also you get analysis of the institutions and their in-house analysts. Moreover, they also have a very cool economy calendar that we have discussed in our previous videos, and there are lots of things. Feel free to check out fastbull.com. The link is in the description. Download the mobile application. In fact, I have Also requested the FastBull team to enlighten us with a proper explanation of their website and the mobile application. Maybe in the first week of December, we will have someone from FastBull who will help us to use the website, or how to do fundamental analysis, how to get the timely updates, or how to use their FastBull platform in the best possible manner. Maybe we will get someone very very soon. Anyways, the link is in the description. Please feel free to check out. Okay, now let's look at the chart of gold. So let's go to the hourly chart, our favorite time frame. So market is an uptrend, no doubt. Okay, so in this type of market situation, what is the best trading strategy? The best trading strategy is always buy at dip. So whenever you will see market coming down, market coming for retracement, that will be the best trading opportunity to go for a buy position. So on the chart of gold right now, we have 1990 to 1987 as the first level where we can look for buy position. Why? Because we have FIBO 23.6% retracement level. Apart from that, we also have good support around this area. Means we have good presence of buyers around 1990 to 1987. So in case market shows deeper correction, then we can look for buy around this area. So volatility of the market will be important. And below this level, as we have already discussed yesterday, we have second support around 1978 level. But on Monday, due to less volatility, I don't think so market will be going for 1978 or 1965, 1970 level. But yes, these levels are still very much present. Okay, so 1990, 1987 is the next important level for us, where we can look for a buy, and below that we have 1978. As I said, volatility of the market will be important. Okay, so in case you see that on during the first half of Monday, market is coming down, but there is not much volatility, in that case you can also observe the market around this particular level here, where around 1994. Around 1994, I cannot give you the exact number because this is a dynamic support. You can see I have just marked the 100 moving average here. You can see 100 moving average, and in some instances the 50 moving averages, they have been providing support to the market. So dynamic support, yes, in trending market dynamic supports are very useful. So you can also look for support around this area. This is a 50 moving average, the green one, and the blue one is the 100 moving average. So they have been working as dynamic support. So if market comes for retracement with low volatility, you can also expect a bounce from there as well. If market bounces, we can look for a buy position. So right after the market opening, if market shows correction or retracement, first of all, we need to observe the volatility of the market. If the volatility is low, if you see market is going down with small red candles, we can look for support around 1994, 1995. If market bounces, we can look for a buy. Then if market shows deeper retracement, we can look for support around 1990, 1987, 86 level. Simply switch to lower time frame like 15 minutes. Observe the market behavior. If market takes support, shows price rejection from middle, you can look for a buy. As the trend of the market is bullish, we have also seen the market sentiment. So as a result, it's better to be on the buy side only. Okay, so considering all the factors, let's look for buy at support. Okay, but if market goes up straight away, okay, if market goes up straight away right after the market opening, that will be a difficult situation. Why? Because 2010 or around 2010, it can be 2007, 2008, 9, 10. So 2010 is the ultimate level, and really if market needs to continue the upside, then obviously gold will have to cross 2010. So here in this particular portion of the market, okay, or if I simply ask you, my dear friends, that just tell me, what do we have here? Then can you say that this is an uptrend market? Obviously, no. We can clearly say that this is a sideways market. Overall trend is uptrend, but this is a sideways market. So to get a breakout, okay, to get a breakout, we need gold above 2010. So if you are planning for a new buy position, and if you want to be a swing trade, looking for swing trade, then yes, you need to wait for a gold to cross 2010. Because if gold cross 2010, 2011, then it will be a trend continuation. But if you see that gold crossing 2010 during the first half, try to avoid, wait for 4 to 5 hours, and only place the order by the US session. Okay. Or by European session, if you see gold going up with a big green candle, it's little bit critical because you need to understand the importance of volume. Without volume, there cannot be a breakout. So to continue the upside, we can go for a buy above 2010 level. But if gold breaks, sorry, if gold reverses from 2010, let's assume that on Monday, listen to me carefully. Let's assume that on Monday, gold goes up to 2010, fails to break, and it reverses. Then it depends on you whether you want to go for sell or not. Because in uptrend market, usually it is better to avoid sell. But if you have the experience, if you know how to do scalping, you have got proper risk management skills, then you can look for a sell at 2007 to 2010 as well. But otherwise, if you're a beginner, try to stick to the levels that I mentioned. Means buy a dip. Whenever market coming for retracement, try to buy a dip. So if gold reverses from 2010 level, your next buy position will also be on 2000 level as well. 2000 is a psychological was a psychological resistance, so 2000 will be working as next support as well if gold reverses from 2010. I know it is a little bit complicated. Maybe I have messed up your head right now. So if you're confused, then please watch the video. And if you have questions, then you can just write an email to me. Okay, I'll be glad to help. Flexibility is very, very important. So as a trader, see, uh, we cannot predict the market. We need to make money in the market, to survive in the market. We need to adapt ourselves according to the market situation and behavior, and flexibility is very, very important. Right now the trend of the market is towards the upside, so as a result I am suggesting you that try to go for a buy at the, because the number of buyers are higher. Okay, and in case market doesn't come for retracement, then obviously we cannot sit idle. In that case, we need to go for a buy when market will be going above 2010, because it will be a breakout. Okay, and on the other hand, if market fails to break 2010, so still considering or respecting the overall trend of the market, okay, you can avoid taking a sell if you do not have much experience, and then you can look for buy at retracement around 2000 level. Hopefully, I made my point right now. Okay, so this is all about gold right now, my dear friends. And first of all, I do not have any Telegram profiles. I do not have any group by the name The Trader Next. So there are many scams going on. Please stay away from all these groups. These are all scams going on in my name. They're asking for money. They are showing huge investment opportunities. Those are completely fake. Those are not possible, practically not possible. My dear friend, just use your common sense. These guys are claiming that they can double triple your money in couple of days and couple of weeks. Then what the banks are doing, don't you think the banks like JP Morgan, Chase, Lloyd Bank, they have the capacity? Okay, so this is not possible. Stay away from all these scams. These are my name. I'm extremely sorry. Okay, and as you guys already know, the world's most affordable forex trading workshop is back, that I conduct in both Hindi and English. दोनों language में ही होता है. If you really like my work, and if you're looking to take your trading to the next level, or trading as a serious source of income, you can consider joining the workshop. The best part is that it's the world's most affordable forex trading workshop, and it's a 3 days workshop. Everything is mentioned on the website. The link is in the description. It's a 3 days workshop. These are the topics that I'll be covering during the workshop. And you can see that the best part is that after the 3 days workshop, you'll be getting 1 month support. So what are the benefits that are also mentioned on the websites? You'll be getting regular market updates, analysis. We also have a community. My story is also mentioned so that you can understand that nothing is impossible in the market. This is a questionnaire. I have placed the questionnaire at the top because the workshop is not for complete beginners. The workshop has been designed only for those people who have been struggling with the market, unable to make money for a couple of months and years. And the best part is the fees. You can see it's only $15 for 3 days workshop and 1 month support. And yes, trading takes time. If you are looking for guidance, then obviously you can sign up for a semi-annual or lifetime support. Okay, so you can sign up because you'll be getting personal sessions with me to clear your doubts, to ask questions, and many, many more. The dates are, you can see the dates are 6, 7, and 8 of December for Hindi classes. Hindi का जो classes होगा इन डेट्स पे टाइमिंग ये है शाम को 6 बजे. एंड इंग्लिश क्लासेस 11, 12 एंड 13 ऑफ दिसंबर. Classes will be conducted over Google Meet. So you can sign up. Okay. And these are the payment options. Okay. So that's all, my difference. Bye bye. Take care. Have a lovely weekend. Have fun with your friends and family. Bye bye. Take care.